Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Dow Jones Industrial Average and the Dow Jones Transports, DJI and DJT respectively. We're going to bring you up to date with our Elliott wave counts and then do some other analysis as well. The first thing I should point out before we dig into the Elliott wave count, because I think it's interesting and it's going to come up across several other people's analysis you no doubt have come across on YouTube already, is the divergence between the transports and the industrials. This is normally a very ominous sign for the stock market if this signal is confirmed, and let me just show you exactly what I mean. So let's open up our object tree and just hide our count for the moment for the Dow Jones Industrials here. We're just going to zoom all the way in to all the price action since May this year, and super duper simply we've gone high, higher high, price moving up since May. We come to the Dow Jones Transports and turn the count off for a moment, we get the opposite. Since May, price has been setting a series of lower highs and lower lows. This is divergence between the Dow Jones Transports and the Dow Jones Industrials. This is a leading indicator of this. So we often see these divergences creep up before a major market correction. Now, we don't get always the kind of warning we're getting now in terms of the accommodative time frame we've been given, May to September almost. For example, we get much shorter warnings sometimes. If we look over here between these two highs, high, lower high, the transport started to get nervous and set this divergence in January last year into February, when the first rumblings of the potential impact of the pandemic upon the global economy. So loss of confidence here. Meanwhile, the Dow Jones Industrial Average did the opposite. In the same space, it set a higher high. So we had high, lower high, high, higher high, high coming to set a lower high at some point, high, higher high. So there's divergence and one leads the other. The transports leads the industrial. So we're getting signals already that the market's weakening and it's going to break down soon. Soon is one of those words which people can interpret whatever suits their pleasure or displeasure with someone's analysis, I've come to realise. So don't read too much into the word soon. Your interpretation might be completely different from mine. But either way, relative to what has been a 12-year bull market, soon. Right, so now let's bring up our impulse and our count until the 2020 low, and we'll do some Elliott wave analysis here just to bring you guys up to speed. It's been months since I've covered the Dow, because getting a count off the low has been very tricky, much more so than the SPY, the Russell or the Nasdaq, and therefore it's been a while since I covered it. But let's just go back to 2009 for a minute here. Waves 1, 2, 5 waves up into cycle degree 1, zigzag into 2. 5 waves up into cycle wave 3, expanding triangle into 4, and now into cycle wave 5. Looking to top in super cycle wave time sometime out. I don't know when. We could be doing it now, or it could be well off into next year. It just depends on where we are in the smaller time frame. But topping out in cycle wave 5, topping out in super cycle wave 5, topping out at grand super cycle degree 1 or 3, depending on whether or not we count 1929 to 32 as grand super cycle 1. So either way, it's 1 or it's 3. But it's a correction at grand super cycle level, which means a devastating bear market, the likes of which no one who has been a devastating bear market, the likes of which has never been witnessed in living memory. Okay, because it will be correcting over 100 years of price data. So, and I guarantee you, anyone who's entered the market in recent years doesn't even begin to have the capacity to fathom that kind of retreat in price. I don't think I do. I can talk about it theoretically, but I have no appreciation of it in reality. Okay, because it's, like I said, it's beyond living memory now. We're going back to 1929. Maybe there's a couple of people still knocking about, but there aren't many. So either way, sooner or later, big correction. Big correction relative in the shorter time frame coming as well, but nothing like what we're looking at for in the future. So let's have a quick look at the geometry I've used to frame this market. We're just going to bring up this pitchfork here. Now, this is proven, as I pointed out with the SPY as well, just an incredibly strong relationship between this long-term pitchfork and the price action. And you can see in multiple places channeling which appears, for example, between the 61.8 and the 38.2 here, move down to the bottom, back test the median line, move down to the bottom, test the 61.8, test the 61.8, test the median line, back test the median line, out the channel, back test to the top of the pitchfork, down, up, channeling here between these two levels, test of the 61.8, all the way out of the pitchfork, back test the side of it, back test the inside of it, median line test all the way up to the top. And it doesn't just work on long time frame. I mean, let's just zoom in and look at how technical this pitchfork is. So here we are, price action since May. A 12-year long market, right? A pitchfork placed on a chart that's in that time frame, and a Nat's cock test of the top. That's how close it is. Test of the top. Where do we go? 61.8. Where do we go next? Tick 89. Where do we go next? Tick 50. Look at this. You can't get more technical than that in a short time frame, and it's on a long-term analysis. So it's just working. It's just there and it's working. Alright? Which is just, I find, even though I've been using them for years, I still find it fascinating. That you can just slap something on the chart like this, and it can be so accurate even over a short time frame. So let's now remove our pitchfork, and let's bring up a short-term count, which is this one. Bear with me. So yeah, working our way up to a high from the March low, we have 1, 2, 3, 4, 5 intermediate waves into primary wave 1. We have, if we show our trend lines here, we have a triangle alternating with a zigzag at intermediate degree. We then have a regular flat pattern in the primary 2, A, B, C here. And then we have a 1, 2 intermediate degree, 1 here as a leading diagonal at minor degree, expanding flat into the 2. 1, 2, 3, 4, 5, minor wave 3, minor wave 4. This is a triangle into an intermediate 3, WXY, where we saw that beautiful alternation in the pitchfork, or beautiful pivot to pivot in the pitchfork. Series of 3-wave correction. This alternates with intermediate 1, which was a zigzag. And this is a double combination. And then we have what looks like an ending diagonal. Now we've got an ending diagonal of the expanding variety we were considering in the SPY. Whether or not that turns out to be true, only time's going to tell. But a different kettle of fish here in the Dow Jones. So for me, this looks like a series of 3-wave moves. Here, there's going to be one in here somewhere. 3-wave move to here. There is one in here on a smaller time frame here, so maybe one more move up here. Could have topped here, and this could be a 1-2. I don't know. We haven't taken out this wave 2 pivot yet. We haven't seen a bearish engulfing candle. We haven't seen a hanging man on the weekly time frame. We haven't seen anything here in the Dow to suggest that reversal's in. Alright, so still waiting to confirm that. Could still be pushing higher. So that's the impulsive count. I have an alternate, which is a zigzag. Okay, and this, that's the target. Where's the count? There's the count. So this idea is a little different. This works on the idea that rather than the wave 3 topping out, let me just find where it is. There it is. So rather than the cycle wave 3 topping out over here into this expanding triangle, we're saying it topped out over here. So if we just remove the confusing trend lines for a moment, wave 3 topped out here, and this essentially means what I'm saying as an alternate is this is an A, this is a B, and this is a C. Super simple. Right, so because of the movement, how aggressive this move has been since the March 2020 low, and the time period it's taken, it's very unlikely people could imagine this being a corrective move. But that's because they're looking at it in a, you know, a year-long or 18-month bubble rather than a 12-year market. So, but it is definitely possible, I assure you. Doesn't mean it's right. It's just an alternative. So this is the idea of an A, B, C. Now I came up with this middle of last year when we were still hanging around below the highs that this was an A, B, C regular flat, but it's become an expanding flat if this were to be correct now, or a running flat if the C completes higher than the A. If it goes beyond it, it would be expanding. So although it's extreme, it's not that extreme. If I show you a typical target for the length of the A to find the B, we get the 1.618 up here at 36620.05 in log scale. We haven't quite made it to it yet, so that's a perfectly legitimate wave B target. As extreme as this move is, still technical, and therefore could still be right before breaking down. This is my alternate count though. I have less faith in this than I do in the impulse, but it is a possibility. So now if we just come back, well, let's give you a quick rundown of how it works, because it's really elegantly simple. The idea is the 1, 2, 3 we're working on in the impulse divides perfectly as an A, B, C 3-wave move instead. So it's the same count, but 3 waves, not expecting a fifth, rather than a 5-wave impulse, and that's it. So that's nice and simple. So let's just bring up our other pitchfork for a moment. So as you can see, zigzag or impulse, we're still trading within the wave 2, wave 1, wave 2 pivot of this pitchfork. We have not broken out of it yet. So no sign of the geometry of the market collapsing or breaking yet. So we should be aware of that. So I think that's enough time on the Dow now. We've covered the two Elliott wave counts. Now one more intro. Sorry, that's all my fibs. Another interesting target is this one here. Now we made the same measurement. These are both wave 5 targets, even though we're expecting a primary wave 3, right? These are cycle wave 5 targets. So we're taking wave 1 at cycle wave degree and projecting it from 4 in log scale gives us 36248.77, very close to that 1.618 target for the expanding B wave in our zigzag count. They're right in the same neighborhood. So there's confluence up here which will likely form some kind of resistance or some significant resistance if we don't top out before it. Excuse me. So this is a cycle wave 5 target, and this is a cycle wave 5 target. 43644.30. This is 61.8% of 1 and 3 from 4. So this is a huge move higher. So on the great scheme of things, if our idea of a 1 and a 2 and a 3 and a 4, this would be a gigantic 5 going well out into next year. Which would be the completion of the cycle wave 5, super cycle wave 5, grand super cycle all the way up here, but still expecting that significant wave 4 to come in sometime at primary degree sometime soon. I say sometime soon, like I said, careful with the interpretation of the word soon. You can make it mean whatever you want it to mean, but if we look at the divergence between the Dow Jones Transports and the Industrials, if this signal plays out, then soon. Right, so now speaking about that, let's come over to the Dow Jones Transports for a minute and have a look at what we've got over here. Let's bring up our count. This counted off of the low much easier, slightly different off of the 2009 low. What we got here was the same zigzag in the 2. We got a flat pattern in the 4, a regular flat rather than an expanding triangle. It still channels very nicely, if I remember. Let's just have a look. Pitchforks, lots of them. So which one do we want? Not that one, that one. So big throw over here in the 3, strong momentum in the 3 of the 3. I'm cool with that. That's, if I'm going to see it somewhere, that's where I'm going to see it. Underthrow here in the 4th, that's the same as the Dow, and then a breakout of the top of the pitchfork, a really clean back test of it in terms of using it as support. So if I show you through the 50 level here, out of the pitchfork, back test it, up, back test it, off we go. Come back down, through it, back test it, down to the 61.8, up to the 50, down to the 61.8, up again. So either correcting or we found support here, double test here, the 61.8. I personally feel this looks like an impulse down. We'll talk about that now. So from the high, saying cycle wave high in the Dow Jones Transports here, which suggests that this market is topped, could be wrong, could be the primary free. It also counts as a possibility, which would link up better with our count in the Dow Jones Industrials. But at the moment, I'm just entertaining the possibility that the transports have topped because this looks impulsive. So primary 1 zigzag into a 2. There was a leading diagonal 5-wave move into the primary 1, zigzag into the 2, 1, 2, 3, 4, 5 intermediate waves into the primary 3, intermediate 4 expanding flat, intermediate 2 zigzag alternation, and perfect impulse wave here. And then flat pattern, expanding flat pattern at primary wave 4, contrasting with zigzag at primary wave 2. So alternation, 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 alternation. Nice clean impulse with no overlap. Actually nicer to look at than any of the major indices from an Elliott wave perspective. And then an impulse into the top. Since the top, we have an argument to suggest that we've gone 1, 2, 3, 4, 5 wave degree, no overlap at minute degree within the minor wave 3, 5 clear minor waves down into an intermediate 1, no overlap between 4 and 1 price territory. 3 is not the shortest, 5 extends beyond the 3, not a rule that one, but a strong guideline to avoid truncation. So a clean impulse off of the high. So if that's an impulse into a 1, then this could easily be a correction into a 2 before heading lower. The move up in the 2, although corrective to a lower high, could still give the necessary strength for the industrials and the SPY and the Nasdaq to continue to push into their completed patterns, even though we've already topped here in the Dow Jones, because upward price movement is upward price movement, whether it's corrective or impulsive. The market tends to do what it wants to do as long as there's support to do it. And that's what seems to be the case. Now, the break of trend here in the Dow Jones is much stronger and more significant than we've seen in the Nasdaq or in the SPY or even in the or even in the industrials, for example. You know, so if we just bring up, I must have a pitchfork for it. Got a pitchfork for everything. Right, so yes, this is what I mean. Now, nowhere else in the SPY or the Nasdaq or in the industrials have we fallen out of the main part of the pitchfork and moved as far over to the outer bound. It depends where you place the pivot. This of course pivot is all the way back here, and the wave 1, 2 was primary degree is different. Instead of it being here, so it's not the same. If we look at it in the SPY and we place our pitchfork off of our proposed 1, 2, we do get towards the outer bound of the fork. But our pivot isn't here in September last year, or September to November. It's back here, not long off of the low back in March 2020. So this is a longer trend that's been going on for longer, and it's getting weak. It's breaking, and we're really getting close to a real, a potential collapse here, a potential breakdown in the transports, because if we are coming up, having backtested the pitchfork here, maybe we're going to come up to backtest it again with a lower high, and then game on. Okay, now this is all, theoretical at the moment. Until we see this geometry break down and we see an acceleration to the downside, we can't be certain of what the industrials or the SPY or the Nasdaq are going to do. We know this is a leading indicator for the Dow, right? We've seen it time and time again in history, but this divergence can disappear between the transports and the industrials given enough time. So I'll be much more convinced of impending doom when this takes its next leg down. If and when it takes its next leg down, I will be much more convinced of impending doom for the industrials. But at the moment, it's just divergence. It could become a lot stronger. Right then, so that's the Elliott wave count brought up to date. So let's do some basic analysis and then wrap up this video then. So if we bring up our MA ribbon, I just need to adjust the colour of this green. That is not the usual colour I use. That one is. Okay, so bring up our indicators. Quick rundown of what we're looking at here. What we'll do is we'll hide the count out of the way. Okay. So we have 4 exponential moving averages in our ribbon. 10 is yellow, 20 is blue, 60 in orange, 250 is green. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short term, 20 for the long, and orange, blue and orange respectively. Sorry. Okay, so let's come out to the weekly time frame first. This is the transports we're looking at, remember guys, DJT we're taking a look at first since we're here. Candle closed the week below the 20, below the 10, but we had upward price movement. You can see for the weekly candles here, you know, this is a low, this is a higher 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 low. So trending higher at the moment. So even though we had a close between these moving averages, we were and have been for 5 weeks trending higher here. So is it corrective, or this was corrective and now we're impulsive? They're your options. No oversold condition reached yet. On the weekly time frame, we have not gone from overbought to oversold on the RSI. Very bearish momentum build up here on the MACD. No long-term divergence between the MACD highs and between the RSI highs with this move up in price. So no real warning that this was coming from a Dow Jones, from a transports point of view, but this itself is a warning for the industrials. So we have to keep that in mind, that we are looking at what is primarily a leading indicator for another index. Okay, so daily time frame. Let's see what we can see. Round trip completed here from overbought to oversold in the RSI. This could be corrective before another thrust down, or this could have been the bottom. Doesn't look like it. We had a bullish divergence, of course, because we went from this low to this lower low, this low to this higher low, which is the preceding indicator that we were about to enter an upward move, which is what we're now doing. Long term, on the daily time frame, looking at the momentum indicators here, I mean, we're below, we finished the week below the 10, the 20, the 60 exponential moving averages, but we've been trending higher the whole time. So a move below it for the close of the week, not exactly bullish, but we have to see downward follow through to be convinced of any further move lower. I still lean towards the idea that this is a corrective move higher. Still well above the 250. Now let's just take a look at our MACD here. Interestingly, going all the way back to June last year, we've had just a series of lower highs. Is it a lower high? Yes, it is. So momentum here in the MACD has just been declining ever since last June here in the transports, and yet look at what we managed to achieve in price. Phenomenal, isn't it? So it's not a divergence unless it's between two highs. You'll often hear me say that, which is when we're testing a high to another high and we say, oh, there's divergence. It's like, well, we don't know it's a high yet, so we should always say high to current price action, I feel, unless we get a confirmation of a high actually being in. So let's move over now and have a look at the Dow Jones Industrials, bring up our indicators, let's bring up our ribbon and see what we can see here. So weekly time frame, let's come out and do the same again. Right then, so as I just said, although we're above the 10, the 20, the 60 and the 250 exponential moving averages on the weekly time frame, still looking bullish, still looking intact, still looking strong. Until we get a reversal, we can't call it a top, but we do have divergence between the previous high and current price action. So RSI here, current price action here, MACD, peak here, current price action here, and of course the opposite occurring in price. So divergence in the short term between the previous high and the current price action could result in a high and an actual divergence. Considering that the Dow Jones Transports may have topped and this continues higher, that divergence may well play out, but we have to wait to see it happen. Let's come down to the daily, see what we can see. Alright, let's expand the chart a little bit. A bounce off the 60 exponential moving average, came down, bounced up, closed the week at the 10, trading higher in the futures as I speak to you at the moment. Wait to see if that translates into a bullish week, or a bullish open for the week. Not always the case that as the market opens so it goes, but in this market it tends to be the case. We've been so bullish for so long. Yeah, below the 10, below the 20, likely to open above, I think, though. Testing with 60, still looking pretty strong. Same trend in the MACD here. You know, RSI has reset a couple of times because of completing major primary wave degree moves 1 and 2, so we can't count divergence between highs in the RSI, but looking at the general decline in momentum in the MACD here has just been a constant high, lower high, lower high, so on and so forth. So it's the same gig. Momentum's been dying the whole time. As more retail money makes its way into the market, more first timers make their way into the stock market, and this momentum continues to die, the divergence between momentum and price just can continue to become more extreme over time. So we'll just have to wait and see. I think I'm going to call it there now, guys. All right. So we've covered everything I want to cover. We've covered the two accounts for the Dow. We've covered the transports. We've covered the divergence between the two. We've looked at some market geometry. So not bad update for the Dow there. I've still got some work to do on this. Maybe give it another week or two, but let's keep an eye on the price data this week and see if we make a new high, and then see how that looks in comparison to the transports. What do the transports do? Do they fail before a new high, therefore they're corrective, while the industrials eke out one more divergent high? That would be very interesting, I think. That would be a very interesting setup to see. So if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, leave us a comment in the comment section below if you want to. Thank you as always to my patrons, your support is greatly appreciated. If you're interested in becoming a patron, please bear in mind you will be charged the day you join and the first of the following month. So we're gone past the 20th of the month, we're getting close to the end of the month, so if you want to avoid getting charged twice in close succession, perhaps leave it until next month before signing up. I appreciate your support, it's brilliant, but I don't want you to feel or to get any bad feels about it. You should sign up when it's convenient for you, and I would always encourage you to wait until the start of a new month, and I would go so far as to say wait until the second of the month, because I've had instances where people have signed up for what they thought was the first, but due to time differences globally they've ended up signing on the last day of the month and then getting charged twice that same day, and I've had to refund them, which of course I would do. So just a heads up, maybe leave it to the second of the month, then join. No fear of a double charge close together. You get a whole month's value, and you get a lot of value. Okay, you get access to the Elliot. You want to learn Elliott Wave. You get access to my Elliott Wave videos teaching you how to do Elliott Wave, and a whole bunch of other trading videos as well. You get weekly exclusives. You get deep dives. You get the lot. Go over and have a read. It'll be in the description box. And if you're not following me on Twitter yet either, the link also in the description box below. Right guys, take care, and I'll be back with you later in the week. Bye bye.